Okay, welcome to this deep dive. Today we are digging into a topic that's pretty much universal. If you drive, you deal with it.
hmm
But it's also one most of us, well, we don't give it nearly enough thought. Car insurance.
That's so true. For most people,
Yeah.
it just feels like, a bill you have to pay.
Yeah,
The goal is often just finding the absolute lowest price, paying it, and forgetting about it until renewal.
exactly. And that focus, just purely on price. Our source material today basically says that's a fundamental mistake.
Yeah.
We've been looking through a really insightful guide on choosing a car insurance carrier.
Right. And the core idea that just jumps right out is that car insurance isn't really a product like buying groceries. It's a promise.
A promise.
Yeah. And the real value of that promise, it only becomes clear when you actually need it. If something goes wrong and you have to file a claim.
So, our mission here in this deep dive is to help you look past just that monthly premium number. We want to unpack what we've learned and figure out what really matters when you're, well, picking the company you're trusting with that promise.
By the end of this, the aim is for you to have a clearer picture, a kind of checklist of the critical things to consider. So you can find a carrier that offers genuine value, real support, reliability, not just, the cheapest rate right now.
Let's get into it then. The source, it really doesn't waste any time getting to that core point. The value is invisible until you need it most, the claim. Just chasing the lowest premium means you're probably ignoring huge things like whether the company can even pay out or how they treat you when you're stressed or if the coverage even fits your life.
It immediately forces you to ask that big question first. Can this company actually follow through? Can they uphold their end of the bargain?
Right. So the first big area we should probably look at is the company itself, their basic financial strength, their trustworthiness. Can they pay when it counts?
Precisely. I mean, think about it. If your insurance company goes bankrupt or if they're in serious financial trouble, that promise to cover your accident or your stolen car, it just vanishes.
Wow.
You could be left totally exposed, facing massive bills yourself.
That sounds, well, terrifying. So how on earth do you check something like that? It's not like they advertise their financial problems.
No, you look for objective third-party evaluations. The source points to financial strength ratings. These come from independent agencies like AM Best, Moody's, Standard & Poor's, Fitch Ratings.
Okay.
These firms, they analyze an insurer's financial health, specifically their ability to pay claims.
Okay, so report cards for insurance companies. What kind of grade should we be looking for then?
The source is pretty clear on this. It strongly recommends looking for a company with an A rating or better. That's from at least one of these major agencies.
An A or better.
Yeah, an A rating basically signifies a strong ability to meet their ongoing insurance obligations. Lower ratings, well, they start to introduce more risk.
Got it. A or better. Is there anything else to check on the company's sort of financial health?
Well, for the really big national insurers, you can sometimes glance at their public quarterly earnings reports if you're really digging deep.
Okay.
And industry watchdog sites sometimes flag regulatory actions or financial concerns. But honestly, starting with those rating agencies, that's the most practical step for most people.
Okay, so once you've established the company seems financially sound, the next critical piece is what are they actually selling? Does the policy match your specific needs?
Right, and this brings us to coverage options and policy customization. Your life isn't the same as your neighbor's, so your insurance shouldn't automatically be either. A good carrier offers flexibility.
The source lists those standard must-have coverages, right? The ones most states or maybe your car loan requires.
Exactly. You've got liability that's crucial, covers injuries or damage you caused to other people or their property.
Okay.
Then collision, which covers damage to your car from, well, a collision, hitting something, getting hit.
Right.
Comprehensive covers the other stuff. Theft, vandalism, hail damage, hitting an animal, basically. Non-collision events.
Okay.
Then uninsured or underinsured motorist protection, really important if someone hits you and they have no insurance or not enough.
Definitely need that one.
And finally, PIP or MedPay.
Okay, PIP MedPay, what's the quick version of that?
Right, so PIP is personal injury protection, MedPay is medical payments. They both help cover medical bills for you and your passengers after an accident, pretty much regardless of who was at fault.
Yeah.
Very useful, especially where it's required or if fault takes time to sort out.
Gotcha. Thanks. So those are the basics, but then the source mentions this whole range of optional add-ons that can vary a lot between companies.
Oh, absolutely. Things like roadside assistance, flat tire, locked keys.
Lifesaver sometimes.
Totally. Rental car reimbursement for while your car's in the shop. Gap insurance. if you owe more on your loan than the car's current value.
Important for new cars.
Yeah. Coverage for custom parts or equipment you've added.
Yeah.
And becoming more common, specific rideshare coverage if you drive for Uber or Lyft, that kind of thing.
Wow, rideshare coverage. Yeah, that's a very specific need. So the point here is, even if a company looks solid financially, if they don't offer the specific types of coverage you actually need for your car, your lifestyle, your work, they just aren't the right fit. Price doesn't matter then.
Exactly. You could end up seriously underinsured. And this ties right into policy customization, too.
Oh, so?
Well, can you easily adjust things, like your deductibles, how much you pay out of pocket, and your coverage limits to match your budget, and how much risk you're comfortable with?
Right.
Can you tailor coverage if you have, say, a classic car, or easily add a new driver, like a teenager, or remove someone, change vehicles? That flexibility is key as your life changes.
Okay, that makes sense. So we've looked at the company's foundation, whether their products fit. Now let's circle back to price, but maybe think about it in terms of value. Factor 3 was discount availability.
Yes, discounts. They're absolutely key to getting the best overall value. A carrier might have a decent base rate, sure, but if they offer a whole bunch of discounts that you qualify for, the final price could be way better.
What are some of the biggest or most common discounts the source pointed out?
Safe driver discounts are often huge. The source mentioned potential savings of like 10 to 30%. That's significant.
Wow, yeah.
Multi-policy discounts, bundling your auto with home insurance or renter's insurance. That's very common and can save a lot too.
Bundling, right.
Also, having multiple cars on one policy, being a good student, having low annual mileage, and using telematics programs.
Okay, hang on. Telematics, what exactly is that again?
Right. Telematics or usage-based insurance. It's where the insurance company uses either a little device you plug into your car or sometimes just an app on your phone.
Okay.
And it tracks your driving behavior, things like your speed, how hard you brake, mileage, maybe even the time of day you drive if you show you're a safe driver based on that data.
They give you a discount.
Exactly. You get rewarded for safe habits.
Huh. Interesting. So looking at that whole menu of discounts is just as important as the starting price. Things like paperless billing or auto-pay discounts probably add up too.
Precisely. A carrier with a really rich discount menu gives you more ways to potentially bring down the cost, giving you that best combo of solid protection and a price that fits your specific situation.
All right, let's shift gears to the moment of truth. The whole reason you have insurance, making a claim. This is where that promise really gets tested.
Yeah, this is arguably the most critical factor. The claims process and the company's reputation around claims. You absolutely need a carrier that handles claims smoothly, efficiently, and importantly, fairly.
What does a good claims process actually look like, according to the source?
You want options, right?
Yeah.
24/7 claim reporting phone, definitely website, a good mobile app.
Makes sense.
Digital filing capabilities are huge now. Guidance on using their approved repair shops, maybe help coordinating a rental car. The ability to track your claims progress online or get text updates, and, ultimately fast and fair settlements.
Because if that process is a total nightmare, slow, confusing, feels like you're fighting them, it just adds incredible stress on top of whatever accident or theft already happened.
Absolutely.
So how do you know before you actually have to file a claim if they're any good at this?
You've got to do some homework. Research their reputation specifically for claims handling. The source recommends reading customer reviews, but focus on what people say about their claims experience.
Okay.
Check out independent studies like the J.D. Power Claim Satisfaction Study. They survey actual customers who've been through the process.
J.D. Power, right. I've seen those.
And importantly, look up the NAIC Complaint Index for that specific carrier.
The NAIC Complaint Index. What's that?
That's the National Association of Insurance Commissioners. They track formal complaints filed against insurance companies. Their index compares the number of complaints a company gets relative to its size, its market share.
How does the scoring work?
A score of 1.0 is average. Anything significantly below 1.0 means they get fewer complaints than average for their size, which is generally a good sign.
And above 1.0?
Anything significantly above 1.0 is a major red flag. It suggests customers are having more problems with them compared to other insurers.
Okay, that's really helpful. So J.D. Power for satisfaction, NAIC for formal complaints. Because if a company is known for dragging its feet, disputing things unfairly, or denying valid claims, that peace of mind you thought you were paying for just evaporates.
Precisely. And that ties directly into the next point. Customer service and communication. Insurance policies, claims. They can be confusing. You're bound to have questions.
Absolutely. You need to be able to get help, especially when you're stressed out after an incident.
So look for carriers with agents who seem knowledgeable and, frankly, friendly and helpful. Are they available when you need them? Preferably 24/7 for urgent stuff. Do they offer multiple ways to get in touch: phone, online chat, email, a functional mobile app? And do they proactively communicate, like send you updates on your claim status?
Responsive support sounds absolutely crucial. It's kind of the human side of that promise, isn't it?
It really is. Good service makes the whole thing easier to navigate and understand, reducing frustration.
Now, let's swing back to the money again, but focus on clarity. Factor 6 is pricing transparency.
Right. Beyond just the total premium, do you actually understand how they arrived at that number? A transparent carrier should give you a clear breakdown,
What kind of breakdown?
showing the cost for each type of coverage, maybe for each vehicle, each driver listed. They should also be able to clearly explain why your rate changed at renewal. And ideally, they give you access to online tools or calculators to see how changing your coverage affects the price.
So no mysterious black boxes or like hidden fees tacked on. Why is that clarity so important?
Well, for one, it lets you accurately compare, quotes, apples to apples between different companies. You know exactly what you're paying for with each one.
Ah, okay.
And it helps prevent those nasty surprises, like unexpected rate hikes or fees you didn't know about.
Speaking of making things easier, Factor 7 is digital tools and technology. This feels less about the core insurance promise and more about, well, modern convenience.
Totally. Most of us expect to manage a lot of our lives through our phones or online these days. Insurance shouldn't be different.
So what should you look for?
Does the insurer have a user-friendly app? That's a big one. Can you easily access a digital ID card through it?
Oh yeah, digital ID cards are handy.
Definitely. Can you manage your policy details, make payments, maybe even start a claim online or through the app? Some insurers are even using AI now for faster initial claims assessments or integrating with smart home tech if you bundle.
So, if you're someone who prefers doing everything digitally, a company that's still stuck in the era of paper forms and only phone calls probably isn't going to be a great fit for you.
Probably not. A tech-savvy insurer just streamlines the whole administrative side of things. And sometimes they offer innovative ways to save money or manage your policy more efficiently through those tools.
Related to how you interact is Factor 8, accessibility and local presence.
Yeah, this is about your preference. Do you like having a local agent you can sit down and talk with face-to-face? Or are you perfectly comfortable handling everything online or over the phone with a call center?
Different strokes for different folks, basically.
Exactly. Some big national carriers have networks of local agents and offices right in your community. Others operate purely direct-to-consumer, no local offices. The source just suggests thinking about which interaction style works best for you.
Because for some people, especially maybe with a really complex policy change or navigating a major stressful claim, having that local agent who knows you, knows your situation can be incredibly valuable.
It absolutely can be. It's a personal preference, but it definitely impacts your day-to-day experience with the insurer.
Okay, Factor 9 circles back around to trust again. Reputation and brand trust.
Right. This is sort of the overall feeling people have about the company. It's built up over time based on how they treat all their customers, not just in claims. It's what people say about them generally.
So, beyond just how they handle claims, what does their general reputation tell you?
It's an indicator of their overall reliability, their service quality, their trustworthiness. You can get a sense of this from general online reviews like Google, Yelp, Better Business Bureau, any industry awards they might highlight. Good old-fashioned word of mouth from friends or family. And maybe looking into how they respond to complaints publicly, if you can find that.
It's that general vibe, right? Does this company seem like they genuinely stand behind their customers, or are they just focused on collecting premiums?
Precisely. A strong, positive overall reputation provides another layer of confidence in that fundamental insurance promise.
We touched on flexibility earlier with coverage options, but Factor 10 really emphasizes adjustability over time.
Yeah, this is key because your life doesn't stand still. Right? Your insurance needs change. Maybe you buy a new car, or you add a teen driver. That's a big one.
Oh, yeah.
Or you move to a different city or state. A good carrier makes it easy and hopefully doesn't penalize you for making those kinds of midterm adjustments to your policy as needed.
And ideally, they should also offer like annual policy reviews, shouldn't they?
Yeah.
To check in, make sure your coverage is still right, see if you qualify for any new discounts.
Exactly. That proactive approach is great. You want a carrier that makes it simple to update your information and adapt your policy as your life evolves. It ensures you stay properly covered without paying for stuff you no longer need.
Okay, let's talk about those little extras that can actually make a pretty big difference when things go wrong. Factor 11, roadside and added services.
Right. These aren't typically about covering the cost of the big accident itself, but more about handling those smaller but still major inconveniences that can totally derail your day.
Like what?
Well, the classic is 204/7 roadside assistance if your car breaks down. Help if you get a flat tire or lock your keys in the car happens to the best of us.
Been there.
Emergency fuel delivery if you run out of gas. Towing services. Some might even offer help arranging repairs or a rental after a covered claim, a sort of concierge service.
Those are the kinds of things that really save you stress and maybe some unexpected cash when you're stuck on the side of the road.
Exactly. They add real, tangible value beyond just the core liability or collision coverage.
Okay, back to claims for a moment, but Factor 12 focuses specifically on speed. Claims payout speed.
Yeah, because even if the process itself is smooth, it's still incredibly frustrating if it takes forever to actually get the money to pay for repairs or replace your car.
Right. Time is money, especially then.
The source mentions some industry benchmarks to look for. Ideally, the insurer makes initial contact very quickly, like within 24 hours of you filing the claim.
Okay.
And then aims for resolution, meaning getting the payment sorted within maybe 7 to 15 days for straightforward claims. Offering electronic payment options like direct deposit obviously speeds things up too.
So the speed after they've decided to pay matters just as much as the fairness of the decision and the smoothness of the process.
Absolutely. Delays mean you might be without your car longer, racking up rental car costs if that's not covered, potentially missing work, or just dealing with prolonged financial uncertainty. A carrier with a proven track record for prompt payouts eliminates a huge source of post-accident stress.
Factor 13 addresses something maybe less common, but really critical for some people: non-standard or high-risk coverage.
Right. Not everyone fits neatly into the standard driver box. This factor is super important if your situation is a bit more complex. For instance, if you need something called an SR22 or an FR44 filing.
Okay, SR22, FR44, what are those?
They're basically certificates that prove to the state you have the required car insurance coverage. Usually they're mandated by the state after a serious driving violation, like a DUI or driving without insurance.
Ah, okay. So it's proof of financial responsibility required by the state.
Correct. But this non-standard category also applies to other situations. Maybe you're insuring a teen driver or an elderly driver where rates can sometimes be higher. Or if you own an exotic car, an antique vehicle, or a car you've heavily modified. Or, again, if you use your personal car a lot for commercial purposes like ride-sharing or food delivery.
So why is this a specific factor to check? Can't any insurer handle these?
Not necessarily. Many standard insurance companies either won't offer coverage for these higher-risk situations or they'll charge extremely high premiums. If your profile falls into this non-standard category, you might actually need to seek out carriers that specialize in these types of risks. They often have a better understanding and might offer more reasonable terms.
Factor 14, ease of switching and cancellation. This is important. You don't want to feel locked into a policy forever if things change.
Definitely. Life happens. You might move to a totally different state, buy a completely different kind of car, or just find a much better deal or service elsewhere and want to switch carriers.
So what should you look for here?
Look for companies that have fair policies on this.
Yeah.
Ideally, no cancellation fees if you decide to leave midterm.
Okay.
Policies that offer prorated refunds, meaning they give you back the money for the unused portion of your premium if you cancel. And generally, good support for transferring your policy info smoothly to a new vehicle, or helping you set up a new policy if you move out of state.
Right. That flexibility just gives you the freedom and peace of mind knowing you're not completely stuck with a carrier if they're no longer the best fit for you.
Exactly. Minimal red tape around switching makes future adjustments way less stressful.
Factor 15 is one that most people have probably heard about: bundling opportunities.
Ah, yes, the classic bundle and save. Most major insurance carriers offer more than just auto insurance. They often sell home insurance, renter's insurance, maybe life insurance, umbrella policies, even business insurance.
And the deal is you usually get a discount for having more than one policy with the same company, right?
That's the main draw, yeah. The most common bundle, and often the one with the biggest discount, is combining your auto insurance with your home or renter's policy.
Makes sense.
But beyond just saving money, bundling can also simplify things. You're dealing with one company, maybe get one bill, potentially have one main point of contact for your insurance needs.
Factor 16 takes us into the nitty-gritty details, policy transparency, and the fine print.
Oof, yeah, the fine print. This is really about understanding the actual insurance contract, that document that lays out exactly what is covered and maybe more importantly, what isn't covered, the exclusions.
Why is digging into this so important?
Because misunderstandings here can lead to denied claims down the road for things you thought were covered. You need clarity on the terms.
So what are the kinds of red flags to watch out for in that fine print?
The source warns about things like vague or ambiguous wording. If you can't tell what it means, that's a problem. Look for specific exclusions for common incidents that you might just assume are covered.
Like what?
Maybe certain types of water damage, or damage to custom parts or expensive electronics inside the car might have low limits or caps. Also, look for how they handle depreciation, especially if your car is totaled. Are their rules clear and fair?
So it's possible the overall price seems transparent, but the actual terms of what you're getting for that price might be hidden in the details.
Precisely. Understanding that fine print, or at least choosing a carrier that makes it easy to understand, maybe with clear summaries or helpful agents, is crucial. You need confidence that you know what protection you are actually buying.
Factor 17 looks at the insurer's history, company longevity, and industry experience.
Right. Basically, how long has this company been around? Have they been doing this for a while?
Why does that matter? Just because they're old doesn't mean they're good, right?
True, it's not a guarantee. But carriers that have been operating for decades, maybe even a century or more, often have very established, refined systems in place. They tend to have experienced staff, a deep understanding of the insurance market, and have likely navigated various economic cycles and industry changes.
So longevity kind of signals reliability.
It can signal reliability and stability, yes. While not foolproof, a company with a long track record has proven it can survive challenges. Companies that are poorly managed or financially unstable rarely last for the long haul. Seeing that history offers some reassurance that they'll likely still be around when you eventually need to make that claim years down the line.
Okay. And finally, factor 18, adjustability over time. We sort of touched on this with customization, but this factor really emphasizes the ongoing long-term relationship aspect.
Exactly. It's the idea that your insurance policy should be static. It needs to be a living document that evolves with you throughout your life.
So again, how easily can you make those midterm changes if needed without facing penalties or excessive hassle?
Right. Do they proactively reach out, maybe for that annual review we talked about, to check if your coverage still fits or if you qualify for new discounts? How simple is it to update your address, add or remove a vehicle, change drivers?
So the idea is you're not just buying a policy for this year. You might be starting a relationship with this company that needs to adapt as your life changes. You get married, you buy a house, maybe have kids who start driving, change jobs, move across the country.
Precisely. A carrier that makes that long-term policy management easy and flexible is key to ensuring you remain properly and appropriately covered throughout all those life stages.
Wow. Okay, so we've run through, 18 different factors there, grouping them into thinking about the company itself, what they offer, how they actually serve you, and the practical side of managing the policy over time. It really hammers home that picking a car insurance carrier is, well, it's a significant decision that goes way, way beyond just glancing at the monthly payment.
And that really is the core takeaway from this deep dive, isn't it? The best car insurance company isn't necessarily the one flashing the lowest quote online today. It's the one that truly fits your specific individual needs, your lifestyle, your budget, both right now and, crucially, as your life continues to change down the road.
Taking that extra time up front to really consider these deeper factors, checking their financial strength, understanding the coverage details and the fine print, digging into their claims reputation, assessing their customer service approach and their tech tools, actually comparing options based on this kind of checklist, and asking pointed questions before you commit. That effort can save you a significant amount of money, yes, but maybe more importantly, a huge amount of stress and hassle later on.
So maybe here's a final thought for you to chew on. If car insurance is, at its heart, a promise, how much value do you place on the peace of mind that comes from knowing the company making that promise is truly stable, genuinely supportive, and flexible enough to adapt to your life? When you look at your current policy, or when you're shopping for a new one, what does it really reveal about the depth, the reliability of the promises you're counting on?